Good afternoon, members. Today we are having a very good faculty named CA Akif Cheulkar ji, who will be, enlightening the members on the topic named Internal Audit Assignment Planning (SIA 310). It gives me an immense pleasure to introduce our today's faculty, Akif ji. Akif ji has over 10 years of post-qualification experience in handling risk, advisory, and forensic audit. He has worked with the internal audit consulting firm named Mahajan and Alibara and BDO India. He took the entrepreneur plug in August 2015. He has been co-opted member of Digital Accounting and Assurance Committee of WRC for 22-23. He has been co-opted member of Internal Audit non-standing committee of WRC for the year 16-17. With this, I introduce before you our today's faculty, Akif ji, who will be enlightening us on SIA 310. The floor is yours, Akif ji. Please continue.
Thank you, Ishwar, for the brief introduction. So, should we start or we should wait? There are 21 attendees right now.
We can start actually.
Okay. So, good afternoon, everyone. Hope my voice is audible.
Well,
So today,
yes.
okay, great. So today's topic is about internal audit assignment planning SI 310. As the topic is little on the theoretical side, I have ensured that in the total presentation where we will discuss different aspects of the internal audit assignment planning, there are multiple examples which I have incorporated in the presentation to give the audience the practical insight about the subject, and also they can relate it better to the day-to-day audit execution of their client. So before going to the internal audit assignment planning, uh, let's first understand the slides is not moving. Is it moving?
No, sir, not moving.
आप ना स्लाइड पे एक बार माउस क्लिक करिए.
हाँ, अभी हो रहा है सर.
हाँ, अभी हो रहा है सर.
Okay. Okay. So before going to the internal audit planning process, let's first understand in overall internal audit engagement process, what are the various phase or the steps which we follow. So generally, we follow three basic steps. First is the planning part, second is the field work, and third one is the reporting part. So once we do the planning, then we actually do the execution part, and then the third is the reporting part where we discuss the audit observation with the auditee, and then we take their remarks, and then we present to them the final audit report. So these are the phases of the report. Now, in many cases, what happens is that we don't give much importance to the planning, and we directly jump to the execution part of the audit, where we start doing the audit vouching, and then we directly discuss the observation with the auditee, and we submit the report without realizing the importance of the planning. Because in planning you will get an idea which are the focus areas where you need to focus. Also you need to understand what are the risks which you need to give proper care to. So we just ignore planning in many cases, and we just move to the execution part. So here in today's session we will understand why the planning is important and how you have to do the planning before you execute any internal audit assignment. So in internal audit assignment, in planning there are two stages. One is when you do a entire organization audit plan for the annually once in a year, and which you brief to the audit committee before the start of the year. which I am sure in the previous speaker must have covered in SI 220. Here, what we will do is that we will be studying about the SI 310, which is with regards to individual audit assignments, where we will understand when you have to do any part of the overall internal audit plan, specific areas, then how will you do the internal audit planning for that particular assignment. So this is the part of the overall audit plan, internal audit assignment planning. So before we go to the planning stage, let us first understand what is individual audit assignments. So I have mentioned here one draft audit universe. This is in a layman language, you can say what are the areas you can do audit for any particular client or a company, and from that what are the areas you will select. So because in a small client you can do all the areas for all the location for entire year, but when there is a larger organization, organization which is having a pan India presence, multiple location, larger volume, so it is not possible for you to do all the areas, all the business activity in a particular year. So you have to decide and select which are the areas you will perform the audit for that particular financial year. So here there are three aspects to any internal audit universe. One are the business activity, which I have mentioned in the column on the left, where I have mentioned procurement, HR, compliance, logistic, inventory management. So these are the areas of the audit. Then there are the auditable unit or the location, you can say, where you there can be multiple plants, there will be HO, there will be multiple warehouses of the company. So that way you will list down all those locations, and then based on your experience, based on your discussion with the management, their understanding, according to them which are the areas according to them which are critical, and you will decide the audit plan. So example, procurement you will do for plant A for quarter 1 and quarter 3 for plant C. Then HR and payroll you will do for HO during quarter 1 and 4, or compliance you will do for HO and plant B. So forth and so on. So this way you will design the entire audit universe or audit plan for the entire organization. And when you will select particular area of that plan, like procurement function, that will be an internal individual audit assignment, which this standard cover as an individual audit assignment planning. So individual audit assignment can be any business activity like procurement, HR, payroll, compliance, logistics, etc., treasury, finance and accounts, or it can be a particular location or auditable unit like any plant which you select, and for that plant you will do all the activity for that plant or specific activity for that plant, or an HO or warehouse, any department or any location or any subsidiary of a company, or any third party audits. Third party audit, best example, like if any of us are doing bank audits, then there is an RBI circular which say that for all the outsource activity, outsource third party vendor, you have to do a audit annually. So that can also be one of the auditable unit. So this is the background of an internal audit individual audit assignment. Now we will move towards the standard. What standards say about the in audit assignment planning? See, before we go to the practical aspect, this is what the objective of internal audit assignment planning as per the standard. So standards say whenever you will do any individual internal audit assignment planning, you should ensure that it is aligned with the overall internal audit plan and also with the stakeholder expectation. Then the scope and coverage should form a sound basis for providing reasonable assurance to the entity or the client, and also adequate time and resource to important aspect of the assignment and assign appropriate skill to the complex areas and issues. See, whenever you will do the planning, you will look at it in the next slides, where when you will uh, understand what are the focus area where you need to focus more in any particular assignment, you should ensure that you should give an adequate time and resources to those areas more, and for the other non-critical areas less, to the overall budgeted mandates which you have projected for this assignment. And you should assign appropriate skill to the complex areas and issues. For example, in case where if you are doing any real estate company, for example, where you are verifying RA bills, work certification for the particular client, the audit of an RA bills, then we as a chartered accountant are not that expert to understand what are the work certified, what are the measurement. So it is appropriate that you may take some help of some civil engineer or any engineer to accompany you in this audit, where he can verify the technical aspect, and then you can verify the work completion, and you can verify the audit accordingly. So appropriate skill is also important. Adequate time should be given for a particular area depending on their importance and the complexity. And you should conduct the audit in an effective and in an efficient manner. And it should be in line with all the applicable pronouncements issued by the ICAI. So this is the objective of any internal audit assignment planning. So as per the standard, these are some of the requirement or the methodology you can adapt to do an effective internal audit assignment planning. So these are those areas which we will discuss one by one with example in respective slide. So before you start any internal audit assignment planning, the primary thing is you should have a thorough discussion with the management before you plan your audit. So then there will be a knowledge of business and its environment. You should understand the client, the business better. Uh, we will say understand how detailed we can study, what we can study to gain the knowledge of the business of the client and its environment. Then you have to do certain risk assessment to understand what are the critical areas which you should focus more. Then there will be a technology deployment where you will understand what environment the client is operating, which are the software client is using, how you can adapt to those software, how can you use those software in your audit. And also you can see to it that your team members who are competent and understand those software should be part of your audit team for that particular assignment. So technology deployment is one thing. Then what approach or methodology you will adopt for doing this particular assignment, and what will be the coverage of the audit. So coverage of the audit depend on various factors which we will cover in the next slides. Then this entire audit planning process you have to document, and you should list down all the steps which you have conducted, like discussion with the management. So their minutes of the meeting, the knowledge of the business which you have gained, the risk assessment which you have done, the methodology and the coverage of the sampling methodology which you will adopt. So entire this exercise need to be documented. Then as we discussed the resource allocation in the previous slide, you have to ensure that the proper resource and the proper time should be given for that critical areas. And you have to continuously monitor this plan on ongoing basis. When the audit will start, you will start executing the audit. You have to ensure that the plan which you have prepared, your execution is in line with the audit plan and there is no major deviation to it. So any doubts, anything, any clarification required till now? How to engage an audience? Like there is any method, or we should take it at the end of the session?
Sir, as per your convenience.
So if anyone is having any question, then it will be flagged in the chat box.
नहीं सर, ये भी क्वेश्चन नहीं है अभी तक।
Sorry.
सर क्वेश्चन नहीं है एक भी।
Okay. So if anyone is having any question, feel free to put your question in the chat box. So we'll try to address on ongoing basis, or we can take the question at the end of the session. So the first step, as we discussed, is the discussion with the management. So for better understanding, I will take one area, procurement, as an example, and I will explain to you each and every aspect of all this methodology as suggested by the standard, with the procurement audit as one individual audit assignment area, so that I can give you practical insight also, like if you're doing any procurement audit, for example, and if you have to plan your audit, then how will you adopt this methodology and plan your audit effectively. So as per SI 310, as I have divided in these slides into two parts. The first is as what standards say and what are the practical example which we can discuss to explain and to understand the concept properly. So as per SI 310, it says that the key element of planning involve extensive discussion and deliberation with all stakeholders, including auditable unit, executive management, risk owner, process owner, department head. So you have to discuss with the higher management, also with all the process owner, department heads before you start the audit. Their inputs are critical in understanding the assignment, identification of matter of relevance, and to align stakeholder expectation with the audit objective. So you need to understand what are the areas which according to them you need to focus more. You have to align their expectation with your audit objective and the checklist, to ensure that when you do the audit, the objective of audit is met and the scope of the audit you have to draft accordingly. So as I said, if we take a procurement as one of the example, and if you want to put some question before the management and the stakeholder to understand what are the critical areas, so these are some of the examples which you can discuss, like they can say to you that there are rising instances of exceptions. Example, they will say that the SOPs are not being followed. Many a time you are getting the purchase order approval after the invoice is received from the vendor. The material is procured before, and then the purchase order is just raised for regularization purpose, and the justification the process owner gives many times that there is an emergency purchase, that's why we are procuring. That is one of the red flag or a concerning area for the management, why there are regular cases of exception. So that is one of the areas which you can focus, why if the management provide you such inputs, then there can be a increase in the procurement cost vis-a-vis selling price and production. So management may be concerned about rising purchasing cost, but the selling price or the production is not going at the rate higher as compared to the procurement cost. So management may ask you to go in detail about how the price discovery process with the vendors are happening, whether the quotation are taken properly, whether the negotiation are done properly. So that can be one of the focus areas which you can incorporate in your audit planning. Then they can brief you about some recent fraud which can be which has identified in the past in the procurement, where they can brief you about the areas where this fraud has happened and what are the precaution you need to take while doing the audit of such areas. So this is one of the example. Then then there can be cases where there is a monopoly of few vendors, where people, the purchase department may say that because the area is very isolated. There are no much vendors, so there are monopoly of few vendors from which they are dealing. So you have to see to it that when you do a purchase audit, you have to see that whether they are taking proper care in providing the requisition to many vendors and they are getting the quotes, or they are just favoring few vendors. So when you will be doing the audit, you have to ensure that the price discovery mechanism should be a focus area. If someone says to you this is a monopoly or there is a increase in procurement cost, then management may say about manual process in many areas where you have to focus more, because there is a chances of there is chances of any error or chances of any fraud is more. So in those areas where there is no automated control, you can focus more on those areas. Then, as I said, there will be non-adherence to SOP in many cases where SOP is not followed, or there can be a quality rejections in many cases. Management or the process owner may say that there are many cases where they are realizing in last couple of months that there are many call rejections of material. So you may have to check whether those vendors are having the cases regular basis of quality rejection, any inferior quality of goods are procured from some vendors, or are favoring some vendors. So these are some of the examples where with the management when we will discuss before planning, these are kind of inputs you can get from the management. On basis of that, you can design your audit plan accordingly, uh, taking into consideration this some of the key focus areas. So intention of taking those practical example is that by just reading the draft of the SI, you will not be able to relate this to your day-to-day audit execution of your client. So if by taking example, you can relate that how you can also incorporate such question in any areas which you will take in the audit, and you will ensure that you do a proper audit planning. So second, as I discussed, is the knowledge of business and in its environment. So when you will discuss with the management, also you will gain many. You will understand many things about the client business. Apart from that, also there are certain things you can verify to gain the knowledge of the client business. So as per the standard, standard says that internal auditor shall gather all information required to fully understand the auditable unit business environment, the risk it faces, the legal and regulatory requirement, the activity conducted, and its day-to-day operational challenges. The extent of information required should be sufficient to enable the internal auditor to identify matter which has significant effect on the auditable unit financial operations. So here focus should be to understand the knowledge about the client business, either from the internal source or from the external source. So these are the few examples from where you can get the insight of the client business, like analysis of company annual reports and the qualification. So you can, before you plan, you can take, if it is a listed company, then you can take the annual reports of last couple of years and study the annual report about the trends, about the qualification, if any has been reported by the auditor. Or if you have an access to the financials, if it is not a listed company, you can take it from the management and read it before you start audit planning. So you will get a lot of insight from that. Then you can, if you get the access to the previous internal audit reports, then you can verify those. You can understand what are the critical areas which are reported in the past internal audit report. What are the recurring issues which are coming in each and every internal audit report. So many times it happens that, sorry, just so many times it happens that in internal audit report we keep on highlighting factual issues like In some cases, purchase orders are not there. In some cases, there are some payment without invoice. But these are all factual observation because we don't focus on the process gaps, on the internal controls. You will see in many internal audit report the recurring issues keep on coming. So you can focus on those areas, trying to find out the root cause, and then recommend to the auditee what control they can put in place in the system so that those recurring issues can be eliminated. So internal audit report can be a good document to understand the client business and the issues. Then you can analyze the company website. You can get the detail about their services, offering their products, uh, their location, their history. So website is also a good information base for you to understand the client business. Then in some cases when there is a client of reasonable size, you can also uh, insist the client to have an initial visit to the plant if you are doing a plant audit uh, to understand the client business better. This plant visit will give you a good amount of information about how the client operate, what are the processes there. You can have a 1 day visit to the plant, understand their documents, understand their process, and then that will help you in creating the audit checklist or the audit methodology, which will be helpful for you to execute the audit better. Then you can also review company policies, SOPs. This will also give you an insight about the client knowledge processes. Then these are few examples which from the procurement angle you can understand whether company operate for dealing seasonal products or not, so that you can focus on those months where there is more procurement uh, because it is a seasonal product. Like if company is into jams or jams or any food products where which is seasonal, then you can focus your audit period of to that particular area more where there will be higher procurement. Then study of company key products and key raw materials, either from the website or from the client. You can ask for those information, and accordingly you can decide for which raw material or which product you should give more weightage. And if possible, you can also study competitor annual reports and research on the company business on internet also. And annual report of competitor will give you more insight about the ratios, various ratios, and so that you can understand whether the client is operating in the ideal scenario in best business practice, or there are certain gaps which we can client can address by streamlining the process. So this is the example of knowledge of business and its environment. So like what more steps you can perform to gain more knowledge of the business and environment. There can be like you can refer to various circular or notification relevant to the industry, like if you are dealing with banks, then the circular or notification relevant to bank, you can study those to gain more knowledge about the provisions which are applicable to specific industry, and you can incorporate those checkpoints in your audit plan or in your audit methodology. You can also refer to various tax provision which are very specific to certain client or industry, like GST provision which are very specific to certain client or industry. That will give you will be in a better position to ensure that you are verifying the compliance effectively because you have incorporated all those tax provision which are relevant to the client. You basically do all basic check like PF, PT, TDS, GST, but if there is any specific provisions, that can also be handy. And if it is a listed company, you can also go to the exchange website and you can analyze any announcement made by the company in recent times to gain the knowledge whether anything which is critical, which is highlighted by the company to the security exchange. So that those kind of risk also you can incorporate in your audit planning. So this is the example of knowing the client business. So out of the sorry, so out of the eight methodology we will add up for internal audit planning, we have discussed two as of now. One is discussion with the management and gaining the knowledge of the business and its environment. Now the third step is the risk assessment. This is the another critical area which we need to cover in our audit planning. You will get some insight from the first two steps when you will discuss with the management and we will gain the knowledge of the business and environment. What all are the risks which are specific to the industry or specific to the client, which you have to address during your audit and audit planning. So as per the standard, internal auditor shall undertake independent risk assessment of all the aspects of the auditable unit under review. I'll align this with the risk assessment conducted by the management. Now, you are aware that most of the company are meant have documented risk control matrix (IFC), which you review in a statutory audit or internal audit. So they also have their own risk assessment. You can create your own or you can follow the client risk assessment and you can add any point if which is missed out by the client, and you can do your own risk assessment on the areas where you feel that you should focus more. So this require prioritized focus audit work on high risk part of the auditable unit and with due attention given to the matter of importance and complexity and sensitivity. So as we have discussed, this exercise may involve site visit, preliminary survey, key risk mitigation, what are the internal controls, testing effectiveness of it, and also to understand what are the risk mitigation in case if there are any control gaps. So to understand this theory, we will take one example and understand what SI 310 want to say. So see, this is the RCM or a risk control matrix for any company where you will plot the risk, what are the control, whether there is any control deficiency and what are the compensatory control. So as I mentioned that we will take procurement an example and understand each point. So if you have to do a procurement audit and if you have to do a risk assessment, these are some of the example which you can take. So in any procurement process, what will be the key risk? One of the risk is that some fictitious vendor can be created in the system and the invoice can be accounted against that particular vendor ledger and dummy purchases can be accounted. So this is one of the risk. What can be the control? Company will say that we have a control on vendor code creation where the vendor code creation can be done only by IT department, and there is a segregation of duty properly, and the purchase department or account department don't have any rights to create the vendor. So here there is a risk which is covered by the proper control. So you will mention in the column control deficiency no, because they as per the management and as you have assessed, there is no as such there is no control gap or internal control gap here. In the next example, if second risk can be excess expenditure over budget. So as we say in the procurement process, the company create an annual budget every annually, so at the start of the year, and then all the purchase orders are mapped to the budget so that any procurement is not done over the budget or without the approval. So in many cases, this budget is not linked to the system or the purchase order. Uh, it is tracked manually. So there can be such gap where it is not automatically linked, but it is manually verified before approving any purchase order. So here there is a control deficiency in this case that purchase order is not linked to the budget in the system. So, but there is a compensatory control here that before approving any purchase order, it is verified with budget tracker maintained in Excel, and then only the approval is given for the purchase order. So when you will do the risk assessment, you will focus more on such issues where there are some gaps, though there are some compensatory controls, but you can focus on those area more, because where there is an automated control, you have lesser scope of any default or any error or any fraud, because systems are configured in such a way that there is a segregation of duty unless there is a collusion. But in ideal scenario, in automated control, you just have to test those automated control once, and we will see how we'll test those automated control also. But in automated controls, there will be lesser chance of risk of fraud or risk of error. So you can prioritize those area more which are having manual intervention or there is any control deficiency. So purpose of creating this risk assessment template is to prioritize those areas of audit which are having higher risk, having a manual intervention. So then there is a third example here, that unapproved purchase order creation. So one of the risks is that someone can create unapproved purchase order. So here purchase order, in this example, purchase order approving rights are only with head of the procurement in the system. So there is a proper maker checker control where the subordinate can only create the purchase order, but they cannot approve it, or the accounts cannot approve it. It is can only be approved by the procurement head. So there are lesser chance for fraud or risk of error here. So as I discussed, you can you can focus more on the other areas rather than this area. You will take these areas in your audit, but you will check the automated control, and you can do some testing of the samples, but you can put it in a medium or low risk. Then there is unauthorized purchase risk, like purchase invoice can be accounted without valid purchase order in the system. So here there is a control that any invoice cannot be accounted in system without creation of purchase order. So there is again very less risk for any fraud or error. Then excess payment to vendor. This is one of the risks where in this example, the control is that purchase order is verified manually before making payment to the vendor. So here there is a design deficiency where system is allowing to make a payment on account to the vendor. So even if you have a proper control of creation of PO, your budget is linked, but you can still make a payment on account to the vendor. Then there is a risk that without any valid purchase order, without any valid invoice, you can make a payment to the vendor. So this is the high risk area in this example, where you have to focus more on the payment part, on the ledger scrutiny, on verifying the linkage of the payment with the invoices to ensure that there is no error or fraud in these cases. So this is the example of the risk assessment template. So if you go back to the SI 310 with the example which we just discussed, if you read again, you will understand with the practical thing which we have discussed what exactly SI 300 want to say, as internal auditor shall undertake an independent risk assessment of all aspects of auditable unit under review and align this with risk assessment conducted by the management. This is required to prioritize and focus audit work on high risk part of the auditable unit with due attention given to matter of importance, complexity, and sensitivity. So, as we discussed, those areas where there are manual intervention, where there is a design gap, you have to focus, you have to take those areas into focus, and you have to prioritize them while doing the audit methodology exercise or audit planning. Then the fourth part comes is technology deployment. So this is another aspect, very important aspect, where in many cases right now in many clients they are using specific software for specific processes, like for HR, there will be a specific software which is different from their accounting software. In procurement also, for they may be using different portal for e-auction or bidding. They may be using special software for recording the purchase order, for purchase requisition, and these software are linked or integrated with their accounting software, or they may not be integrated to their accounting software. So you have to understand the IT environment in which the client is operating. You have to understand which are the software they are using it, and where you have to ensure that your team is having a proper skill set to use or operate those software. So it is very important in the planning stage you to understand the IT environment of the client. So SI 300 mentioned that key element of internal audit assignment planning exercise involve understanding the extent of which auditable unit has deployed information technology in its business operation, especially if it is unique and different to overall entity. Means there can be a special software created for by the company which are not universal software available in the market. And auditor need to deploy IT tool, data mining, analytical procedure, and expertise required for conducting audit activity and testing procedure. Now here, in case if there is an automation in the system, you can get plenty of MISs from the system. That MISs you can use with different tool. You can cover more audit sample. You can do 100% testing also for certain areas, which we will discuss how will you do it. So automation IT deployment is very important. So some of the example as I discussed, that client must be using some special software for procurement. There can be a portal for e-bidding for procurement. Then there can be a extent of automation like linking of procurement budget with purchase order with invoice, as we have discussed. So there can be a total automation of the procurement process. So you need to deploy IT tools by order will depend upon the level of automation. So what kind of extent of IT tool you have to use will depend on the level of automation implemented by the client. For example, some some client is using Tally, and in Tally there are not many such features available. Many of the things are manual, so there is very less scope for as an auditor to use any IT tool there, because system are not that much IT not implemented that much automated to you for you to analyze those data with help of any IT tool. Because if there are many manual data available, then there is hardly any room for you to use the IT tool. So if you will be using the IT tool, it will all depend on the IT environment of the client. So this is about the technology deployment. Then the fifth part about the standard is about the audit methodology and the coverage. Now, the basic internal audit methodology, as on the start of the lecture which I have just discussed, is that basic internal audit methodology generally we focus more on the compliance part of the transactions. Like for example, we generally do a very transactional based audit or a fact finding audit. Like this is one of the example of a compliance kind of transaction level audit which we do. Like we will take certain purchase samples, we will show our coverage, then we will note the deviation if any. If you have taken 10 samples of the purchase and you have verified 100 sample of the purchase and you have verified it, and you have observed 10% deviation, then we will highlight that there is a 10% deviation where SOPs is not followed, purchase orders were created without approval, or invoice were book accounted without purchase order, anything. So as I say that in the today's governing internal audit framework which institute has recommended, it is beyond conducting the audit in the traditional way, where you have to conduct risk-based audit with the system and process focus. Therefore, the depth of the coverage shall be beyond basic compliance and could be expanded. The internal audit assignment plan shall align the audit methodology and depth of the coverage with the assurance to be provided. So basically, in a simpler term, the standards say that whenever you will do an audit planning, you should focus from the system or process review point of view rather than just verifying the vouching part and compliance aspect, where you will say that out of the trial balance, out of the 10 ledgers related to procurement, I have verified so and so samples and I have found deviation in so many so and so instances. That is not what ICA framework governing internal audit is expecting from a chartered accountant. ICA is expecting more. As the risk of audit is increasing day by day, we have to ensure that our coverage is uh, more from the system and process point of view, so that we can highlight any those gaps, the recurring gaps or any critical gaps to the management, and it is beyond those compliance oriented audit. So as per the as standard only, they have given certain example, like for example, a application of basic process review methodology will test the design and operating efficiency of the internal control, question the process design and explore better and more efficient way of transaction processing, and deploying the risk-based process review methodology, which will help to link internal control to particular vulnerability, evaluate the effectiveness of internal control, and even question the process in place and help identify alternative mitigation. So this, as we have discussed in the previous slide about the RCM, this is the best example for understanding the uh, testing design and operating efficiency. So here we are not doing traditional audit in this example, where we have analyzing what are the risks, what are the internal controls for ensuring that these risks are the risk and the controls, and what are the control deficiency, and what are the compensatory control, and what are the design deficiencies in the particular process. So as per the standard, they are expecting to do, as a chartered accountant, we ensure that we are touching upon the operating effectiveness of the internal control and any design level gaps. So for that, uh, you have to ensure that you are not, this is also important, but you have to also ensure that you extend your audit planning to the level where you will incorporate all process level and the design level gaps in your audit methodology and your planning. Now, for example, in a for the procurement, for example, now if you have to analyze any procurement process and if you have to do a planning, this can be one of the example how you can document the entire process, and then you can plan to which area you have to give more weightage in your planning stage, and how many man hours you have to put for that particular area. So when you will do a risk assessment, there can be a stay there these are the three stages. So if there is any more risk in your risk assessment in the stage 2, then you can put more man hours for that stage 2 and stage 3. And if you see if you feel that for vendor creation, vendor management, there is less risk, so you can put less hours for those areas. So here, first is you will create a quotation, request for the quotation, then you will negotiate with the vendor, then you will select the vendor and onboard them. Then you will create a vendor master, then you will enter the vendor agreement. This is a stage 1. Then the stage 2 is purchase requisition and approval, then creation of purchase order, creation of GRN, then you will update your inventory records. Then stage 3 will be invoice booking, verification of invoice and the payment. So this will give you an overview at the planning stage when you will discuss with the management and the process owner at the preliminary opening meetings, as we discussed in the last slides. You can create such flow chart or in an Excel format, all these line items, and based on the risk assessment, you can decide how much mandates you should give for which areas. Again, once you plan this is some example of a checklist or a coverage. Like for those example which we have discussed in the risk RCM, you can decide on the how much extent of coverage you will take. So as I discussed that if any control is an automated control, like vendor creation is completely automated control, then you can do 100% verification also. And if it is some control which is manual control, then you will have that restriction that you can select limited sample. You can follow the sampling methodology, either random sampling or any other sampling methodology, and you can decide on the number of samples you will verify in the audit planning stage. So this is the example of a checklist and the coverage. For example, in this vendor creation, if you have to verify the vendor creation process, you can verify the system access control to ensure that vendor creation right is with only IT team. So when management says to you that vendor creation right is only restricted to IT team, then you have to take the system rights, access right, and you have to see to it that creation right is only with the IT team and it is not with any other department. And also you can check the audit log of few months or a year to understand whether the rights were given in the past to some other team members, and then during the audit the rights have been just again provided only to IT team. So this is one example of how you will verify particular control and how much extent you can go for the verification. Then expenditure, as we discussed, excess expenditure over the budget, as it is a manual control. You can take certain samples of purchase order with, and you can verify with the Excel budget tracker which they are maintaining manually to understand whether at any point of time any purchase were procured over the budget, and approval was given in spite of budget has exceeded and there was no special approval as per the SOP. Then unapproved purchase order creation. So here also in a traditional way we take certain samples and we verify the purchase order invoice, GRN, everything. But in the IT environment where the client operates, if they are having an automated control, you can take the entire dump of the purchase order, invoice, GRN, and you can have a three-way match. I also from the system also you can get such MISs which can map all three-way map all the invoice, GRN, and purchase order, so you can easily find out whether there is any purchase order created without invoice, or invoice accounted before purchase order, or GRN invoice is accounted without GRN. So this way you can create your checklist in audit planning stage, where you can mention all the areas which you will cover and what will be the extent of the coverage, and the checklist also, so that at least when your team will start executing the audit, they will be clear that what areas they will focus, how much extent they have to cover, and what will be the checklist for them. Hmm. So till now we have covered 5 stages. Just revising it so that we all are on the same page. Uh, Discussion with the management we have discussed. Then knowledge of the business we have discussed. Then risk assessment we have discussed with the example of RCM. Then technology deployment we have discussed. Then the audit methodology and depth of the coverage, which you will incorporate in audit planning, we have discussed. Now the sixth stage is documentation of planning process. Documentation of planning process. Now, once you are through with all the discussion with the management, risk assessment, and deciding upon the extent of coverage you will do in your audit, what will be the focus areas, it is very important to document this planning process. So, essential documentation shall be the planning process, document checklist, and any tools used in the planning process. So as we discussed, you have to create one planning process documentation which can include the flow chart which we have just discussed, or the checklist which we have discussed. Then you have to documentation of supporting the information gathered about auditable units, business and operation system process, and past or no issues. So as we have discussed, you can add those information like annual report of the client, past year internal audit report, other information which you have gathered. You can make this part of your audit documentation of the planning process. When you will gather all those information, it can form part of your audit planning. Then summary of meeting and communication with key stakeholders with summary of their input. So as we discussed that when you will have a kickoff meeting, opening meeting with the client management and the stay and the process owner, you can add those minutes of the meeting also in that document where they have mentioned you about the key areas you need to focus. So that can also be form part of your audit documentation of the planning process. Then the risk control matrix, which we have discussed, the summary of risk mitigating control deployed, like in certain cases where there is an open issues, where there is a compensatory control, that also you can mention in your RCM or a risk assessment document. Then summary of available resource, their competency and the proper matching of their skills with the audit requirement. This also, as we have discussed, that you need to ensure that based on the mandates which you will project for the particular assignment, you have to list down how many team members you will deploy for this particular assignment, and how many mandates you will put for that particular auditable areas. And in case, as we discussed, that if any special skill sets are required, like an engineer for example, and that also you will mention, so that while doing and planning, while execution, you will know how many team member you need to deploy for this particular assignment and how much mandates you are projecting. Then detailed audit program, which leads the specific testing procedure to be conducted for each audit objective. Last RCM which we discussed, where we have mentioned the audit step and the coverage percentage, like 100% or test basis. So that internal audit program also you can document in so that the team will have better clarity on it. And then this plan should be approved by the chief internal auditor or engagement partner in case external service provider. So if this audit is conducted by in-house internal audit team, then the chief internal auditor should approve this plan. And if it is an outsource to the any CA firm, then the engagement partner should approve this before the assignment is start or execution is starting. Then the next part is resource allocation. So in resource allocation, as we have discussed the same thing here, that you have to ensure that the proper resource is deployed for this assignment with proper skill set. Depending on the criticality of the areas, you have to devote that much time for this assignment so that you will do proper justice to it, and you have to provide enough resources required for executing that assignment, so that you can ensure the timelines committed to the client. Next, next one is continuous monitoring of audit plan during the execution phase. So it is not like once you have planned your audit and documented it, you don't have to monitor it, because when the execution will start, there will be multiple deviation from the planning document which you have created. There can be uh, areas where you may not have focused before starting of the assignment, but on the ongoing execution stage, you came to know few areas which are more risky, which you have to incorporate in your plan, or you may have projected not enough man days for executing that assignment. So you may experience the extension of time. So there can be multiple deviation from your original plan. So you have to keep monitoring it. If there is minor modification, then you can continue with it. But if there will be any more major modification where you may have to deploy resources, additional resources, additional mandates, or you have to take up areas which are more critical but not discussed with the management before in the original plan. So then you have to take the approval from the stakeholder, related stakeholder, and document it before executing it. So these are all the aspects of the uh, audit plan. So just give a review, briefly we'll discuss. So you can link all those discussion which we have done in part. So in any internal audit planning, first of all, you have, this is with regards to the first phase of planning and specific to internal audit assignments, not with the overall internal audit plan. It is one of the part of the overall internal audit plan, which will be covered in SI 310. When we understood are the individual audit assignments, then what are the objective which you have to keep in mind before planning, and these are all the 8 uh, areas or the requirement or the methodology as per the standard which you should consider while planning. It include discussion with the management, knowledge of the business, risk assessment, technology deployment, audit methodology and depth of coverage, documentation of the audit plan, resource allocation, and continuous monitoring. So as I cover all these aspects, so anything where you want me to go in detail or any queries you have, then we can take those queries. Vaibhav?
Believe, sir.
Any question, anything
दो
from the
सेकंड सर
audience?
2 सेकंड सर सर एक क्वेश्चन नहीं है एक भी सर
Okay. So we have completed the SI 310. Now it is 410.
Okay. Shall we, go for vote of thanks, or would you like to add something?
No, I have completed my presentation. If there is any question, anything where anyone from the audience want to discuss or any clarification is required, we can take the question or we can complete.
Okay. So participants, if you have any questions, kindly, ask. Sir is there. He will answer it. Anyone from the attendees?
अखिल सर आपके चैट में देखिए क्वेश्चन है सर, अखिल सर।
So I will propose a formal vote of thanks.
There is one
On
question. Hello.
yes, yes, sir.
There is one question. The question is that for ad hoc assignment, do we go through the same process? See, it all depend upon the case-to-case basis. See, generally, a basic knowledge about the client and the checklist of the audit, and to understand from the management what are the key areas you need to focus. This primary thing you should incorporate before starting any assignment to the extent possible. There may be certain aspects which may not be applicable for uh, every internal audit which you perform. For example, some client is very small, operating in a tally environment, having limited business, not many complexity. There you may, on the judgment, you can ignore certain aspect, but key things about the client business, and also discussing with the client about their expectation and documenting the plan to the extent possible. You should maintain those document at least if the client is very small, or it is for very limited purpose you are doing any audit. Anything, any other question?
Uh, so I think there are no other questions.
There is one. Hello.
चैट में डाला सर,
Okay.
देखिए 2 क्वेश्चन सर।
Okay.
एक और है. Okay. Next. Whether there are some standard methodology metrics for deployment in different aspect of the assignment. See, there are certain standards as institutes have come up with various standards. There are COSO framework. There are many standards, but there is no uh, uh, some standard methodology metrics for deployment in different aspects. So see, it depend upon case to case where in which industry you are doing audit, or for which level of volume or complexity you are doing the audit. So there are certain guidelines, standards, institute standards, international frameworks are there, but as we discussed, the applicability will depend on your judgment when you will do the audit. Next question: during audit, if hours and time involved increases compared to time which we calculated when initiated, fees remain same, how to convince? See, the question is that in case during the audit, if hours and times involved increase compared to time which we have calculated initiated, fees remain same, how to convince management for that? See, this I can answer like, if you there is reasonable increase in time and efforts, then you can always consider that. If there is a very uh, unreasonable increase in the time, and then you can always get back to the client, and more from the client aspect also, and from the your aspect also, that you are signing the report. You have to ensure that you give enough time for the high risk areas. If management is not agreeing, or management is saying that you should close the audit with the limited scope which you have verified, then to safeguard yourself, you have to put those scope exclusion properly in your report. Wherever you feel that these areas were not given enough time because the management has refused to provide the further document, then you have to put the scope exclusion properly in your report. See, next question, whether it is compulsory to follow these internal audit standards in all company. Again, see, internal audit standards you need to follow. It is compulsory wherever the standards are in recommendatory, there you can take a call, but where it is standards are compulsory as per institute guideline, then you have to follow those standards. It may happen that many standard may not be applicable, that you can ignore, but if the standard is applicable and if it is not recommendatory, then you should compulsory follow it, and if it is recommendatory, still I suggest you should follow to the extent possible. I think we have covered all the questions now.
Thank you, sir. एक
Yes.
भी question नहीं.
Sorry?
सर एक भी question नहीं है, बस हो गया सर.
Yeah.
Okay. So it gives me an immense pleasure to propose formal vote of thanks on behalf of WRC of ICI. Sir, Akif sir, we are very much thankful to you for explaining our members the planning part of internal audit assignment, which is very much important because it is the pillar of the entire building. You have explained the members and enlightened the members on SIA 310. We are thankful to you on behalf of WRC and the members. We are also thankful to the members for their patient listening. Thank you, sir. Thank you, members.
Thanks for providing me the opportunity, and thanks for all the audience for the patience listening. Thank you.
Thank you, sir. Sanjay ji?
Ishwarji, I am facing some technical issue. I am unable to display my image here.
You are audible, sir.
माइक से आप बात कर सकते हैं, वीडियो नहीं दिख रहा है मगर चलेगा सर, आप माइक से बात कर सकते हैं.
Yes. I'll take it down. Don't worry. I'll handle on my only mic. Okay. So friends, now we are already concluded our first session. Now we are starting our second session, and our next faculty, London faculty is with us. Friends, our next session is on internal controls and risk, SIA 120, and IRA standards 2120, 2130. So friends, once again I welcome you to the second session, and presently we have with us Smriti Parikh. I am introducing her for better understanding for you. She is a chartered accountant with 2 decades of experience. She has spent much of her time in internal audits and control design and testing. She began her career in statutory audits and progressed to tax audits and limited review with A.F. Ferguson and Company, which is now a part of Deloitte. She has worked with 2 of the big 4 consulting firms in their internal audit functions at Deloitte's Mumbai and KPMG, California, USA. She was involved in engagement right from proposal to final engagement delivery stage. She has also prepared SOPs, completed SOX assignments, and special investigations. She has worked with various sectors such as media, telecommunication, travel and tourism, NBFCs, software and hardware companies, service and manufacturing industries. Smriti has certification degree in from BSI as an auditor for ISO standards for risk and business continuity. She is a CA from ICI and CPA from California, USA. Friends, Smriti Parikh has been with Tata Energy since November 2019 and was with Bombay Dyeing before that. She heads the compliance and internal controls function. Previously, she has worked at Tata Power for about 5 years since the formation of the internal audit team. She was instrumental in setting up the internal audit department. Piloted by Smriti, Tata Power Internal Audit was the first Tata company to become IPPF compliant from the Global Institute of Internal Audits. She is actively involved with an NGO, Shramik Nari Sangh, which is dedicated to the empowerment of underprivileged women. Smriti enjoys good food, spiritual books, and discourages classical dancing and watching movies. She had won several awards and gained recognition from IIA and Tata Powers. So, friends, it is a privilege for me and honor for me to present such a versatile personality as today's faculty to share her views and wisdom and experience on internal controls and risk management. So, Smriti, take the charge of the session and enlighten our members on internal audit issues. Welcome you.
Thank you so much for the warm welcome. I'm happy to be here today to share whatever I know on internal control and risks. And I also heard the session just before this, and I think quite a bit of it is already spoken on this topic. But nevertheless,
duplicate display display
what can you see right now? Okay. Yes. Okay.
नीचे okay.
Is this okay? Yeah. All right, just give me a second. Yeah. Okay. All right. So I'm going to try and share as much as I can today. Can we keep this session interactive? I would much prefer to do that. So if you all have comments, etc., if you can put it in the chat, that will ensure that, even if we're looking at some standards, things are interesting. So can I have maybe hi, hello, etc., to make sure that you're around and you're okay with an interactive session? Some response from the audience.
कुछ बोला आपने?
No, I'm saying I'm asking the audience to maybe put something in a chat to know that they are around and they're okay with having an interactive session instead of a one-sided conversation where only I'm talking and people are listening.
चैट में कुछ आएगा नहीं, आपको जो क्वेश्चन आएगा मैम मैं आपको चैट में दे दूंगा मैम, जो भी क्वेश्चन आएगा, जो भी आंसर.
Because then interaction कैसे करेंगे? Because if there are questions and then there are responses.
मैडम आपको मैं ऑर्गेनाइजर बना दे रहा हूँ, तो उसमें आप देख लेंगे तो आपको मालूम पड़ जाएगा.
ओके
2 सेकेंड. आप ना बंद मत करना मैडम इसको. हाँ, अपने साइड से मैं बंद करूंगा. हाँ बोला अभी. अभी देखिए मैम, आपको चैट में आपको क्वेश्चन दिखेगा जो भी भेजेंगे.
हाँ, ओके.
देखना, क्वेश्चन में देखना मैम.
So question as well as chat both.
मैम चैट जो आपके हमारे लिए है और क्वेश्चन.
Okay, great. Let me pull that out. Great. So I've got some highs. Yes. Looking forward. Okay, great. So I see there are some people out there, so we can get responses. Wonderful. So what I'm going to do is talk about, of course, like I said, the topic for today is on internal control and risks. I'm currently working with Total Energies, but I've had my whole career has basically been most of it with working with controls and risks. So what I'm going to do today is share some of my experiences along with the standards that are there on controls and risks. We will focus more on controls. We will get into risks at some point in the conversation, and we will also see how controls and risks are working together. So some of it is theory, so you'll have to bear with me. That's why we will try to make it as interactive as possible. So yeah, let's start. So first thing, what is internal control? What do you think internal control is? There is a bunch of images that you see on the slide, and do you think it's just purely common sense? That's something that we will come to at the end of this slide. Okay, so you see all these pictures on your left. There's 1, 2, 3, 4, about eight different types of activities that are happening on the left. What do you think they're worrying about? If we can have some responses. The first guy is saying, it's risky. Will it? Do I do it? What do you think? The second person is saying, oh no, be careful, to a little child. The third person is testing a doorknob. The fourth person is considering going up a ladder. Okay, trying to safeguard, yes. Risks, okay. What kind of risks? All have different kinds of concerns, yes. These people are thinking about risks, great, perfect. So everybody in their day-to-day life is worrying about something or the other. If you have to change a light bulb, you need a ladder. To reach it, you want to make sure that the ladder is not shaking and you can go up and still come down and still be in one piece and not fall off. Yes, risk of falling, getting hurt, getting robbed. Yes, that is why we have locks on doors, right? Simple. So we think about what the risks are in our daily life, and we are implementing controls without even thinking that this is a risk and this is a control. Okay, someone says it's not audible. I hope the rest of you can still hear me. I'm assuming that's a yes, and I'll move forward. So what kind of steps do we take to assure ourselves, to make ourselves feel secure? That is why we implement controls in our life, right? You could have someone holding a ladder when you're climbing up to ensure that the ladder still stays in place when you're trying to climb down. And what are the things that you do? How do you know things are under control? Right? You need to measure it. You need to have some sort of KPIs maybe to know. You need to have some result at the end to know that, okay, your risks are measurable, your controls are working. What do? You lock up your belongings in a safe. Why? Because you feel that there are robbers that could come and rob you. Suppose you have something that is quite precious. You will make sure that the safe is hidden. So you'll have several levels of controls. Why are you recommended to keep your ATM or debit card and your PIN separate, or memorize your PIN? Because that's the key to the lock that will give someone access to money that you have in your account. So these are the examples of controls. This is just an introduction. So I just want to play a very quick movie on internal control. Let me see if I can pull this up. Give me a second. Okay, can you see the video? And hopefully once I play it, you can hear it as well. Never wondered, what is the true risk? Okay, how do we make this audible? Let me see. Okay, I think it's not working, so we will not use the video maybe. Anyway, it's a simple video on what is risk and controls. It's just something that we can look at. Go back to the presentation. All right, you can see my presentation now again. Yes. Okay, perfect. So we'll move on. Excuse that because I'm not sure why it won't play the video. So what we're going to cover today is the introduction to internal controls, the frameworks that are available for controls. We'll go through the standards, like we mentioned, evaluating a internal control system. What are the principles of a good system, limitations, responsibilities of the internal auditor, which comes from the SIA, responsibilities of the board and management, again from the SIA, questions to be asked to enhance internal controls, and then we can take case studies if we have time. All right, so moving to the first one. Okay. Right. So introduction to internal controls. So internal controls are systematic procedural steps adopted by an organization to mitigate risks preliminarily in the area of financial accounting and reporting, but also operational processing and compliance with laws and regulations. So it's quite all encompassing. We're talking about not only financial risks, but also operational and regulatory risks. So the standards on internal control are multifold. We have the ICAI standards, the SIA 120. We have the IIA standard, which is the International Professional Practices Framework, the IPPF 2130. And we also have COSO, which is the Committee of Sponsoring Organizations, which has the whole COSO cube, which is nothing but talking about your control environment along with risks and controls in it. So one of the questions that again I'd like to add to the audience is, what do you think are the benefits of internal control? Why do you think it's important? To mitigate risk, yes, absolutely. So benefits of an internal control could be for detection of errors and frauds, possibly. Minimize the scope for errors and frauds, definitely. Time saving, efficiency, effectiveness for operations, measuring, we talked about ultimately you need a measure. So if you know that your controls are working, that you know that the organization can reach its objectives. So multifold benefits. So what does SIA 120 say? It says that internal controls applies to all internal audits conducted where internal controls are subject of audit review, are being assessed, evaluated, and reported upon. As per the IPPS standard on control, the internal audit activity must assist the organization in maintaining effective controls by evaluating the effectiveness and efficiency by promoting continuous improvement. So an important point coming in there of continuous improvement. So it's not a point in time. It continues and you keep re-looking at it. So it's a process. And we'll go into the COSO cube in more detail. Then looking at the objectives of the objectives defined in the SIA 120 on internal control. So it says that it provides a common terminology on internal controls to prevent ambiguity or confusion, prevent confusion on the subject matter. So we're coming to the same common language, which means that we understand everybody. Defining internal controls, how they mitigate risks, how they are viewed from a legal perspective as well. The other objective is to explain responsibilities of management and auditors in regard to internal controls as mandated by laws and regulations. It's also to specify certain requirements which need to be met to able to provide independent assurance as a third line of defense, which I'm sure you are all familiar with the 3 lines of defense. So as an independent assurance on internal controls in the organization. The IIA standard, it talks about the must evaluate the adequacy and effectiveness of controls in responding to risks within the organization's governance, operations, and information systems regarding a whole host of things. So which are given here. So it talks about compliance with laws and policies similar to the SIA, accomplishment of a mission or the objectives, relevant and reliable data, whether your data is actually relevant, it's reliable, economic efficient use of resources. Again, you see the standards are quite similar, they talk to each other. It also looks at safeguard of assets. So if I just look a little bit at 2130, the standard itself, it says, based on the results of a risk assessment, the internal audit activity should evaluate adequacy and effectiveness of controls, which encompasses all the 3 things that we saw, which was governance, operations, information system. So it can include the reliability and integrity of financial information, safeguarding of assets, etc., etc. The internal auditor should ascertain the extent to which the operating and program goals and objectives are established to conform to those of the organization. The auditors need to review operations and programs to see whether the results are consistent with the goals and they are implemented or performing as intended. As intended is nothing but whether it's meeting the objectives. Then adequate criteria are needed to evaluate these controls. So you need to know what and how much you're evaluating. Otherwise, you're leading nowhere. So internal auditors should ascertain the extent to which management has established adequate criteria to determine the objectives and goals have been accomplished. So if you don't have KPIs to measure against, you're not going to know whether you're going to reach them or not. And if inadequate, that's where the auditor's creative expertise comes into play, where you develop appropriate evaluation criteria, you help them with recommendations. That's the objective of the ultimate audit report. So getting into a little more details on the objectives of internal control. The management has 3 broad objectives in designing an effective internal control system. So if you're starting afresh, looking at designing an internal control system for a management, so you're doing a consulting assignment, these are really helpful to keep these 3 in mind. So we keep reiterating these words because they're important and they basically encompass everything that internal control wishes to do. These objectives fully support the goal of the internal control framework. So we talked about reporting. Objectives pertaining to internal and external reporting. So these could be financial and non-financial reporting. It will encompass reliability, timeliness, transparency, or other terms or conditions which are set by, say, regulators. Banks need to are highly regulated. They need to comply with policies of RBI. There are a lot of companies that they have their entities which have their own policies. You need to comply with those policies. So you could have multiple of these reporting objectives. The second one is operating. So operating objectives. These are pertaining to the efficiency and effectiveness portion that we talked about. It includes, again, operational and financial performance goals, especially the safeguarding of assets against losses that comes into this objective. And then the last one being compliance, which is nothing but your laws and regulations, which are applicable to that entity, that industry. And they're quite varied, especially in India, where you have a whole host of laws. You could be going from local laws, state laws, laws at the country level. And then, for example, if there are MNCs like the one I work at, it's also international laws that are applicable to the entity here. So a lot of considerations that go into these objectives. Then the next, getting into slightly pictorial definition, which is also in the standard of internal control. So you see these boxes here. So it's talking about internal control over financial reporting, and then it's looking at operational control, which we spoke a little about. So both of these together look at internal financial control. So ICFR plus IFC, which is financial control, could be a host of process level controls with different processes. You have an HR process, you have an operational process, you have an inventory process, etc., etc. And then you have entity level processes. We'll get into that in more detail later. All of this, the process and the entity level controls, make up the entire set of internal controls. And then to that, if you add also the environment in which the company is operating, the area in which it's operating, you will have the entire internal control system. So internal controls are essentially risk mitigation steps taken to strengthen the organization's systems and processes. It also helps to prevent or detect errors and irregularities like we saw. The actual steps of mitigation, which could be, for example, reviewing, approving certain documents, physical counts, segregation of duty or SOD as we call it. These are all control activities. So internal controls mitigate the risk of financial exposure. These are generally what is known as the internal financial controls. And when they mitigate operational risks, they are also referred to as operational controls, of course. And some controls, some ICs generally operate with human intervention, which are manual controls. But in an automated environment, you would be testing the computer controls. You will have to see how secure the systems are. These are nothing but your IT general controls. For example, access controls to a system. You could also be checking transactional processing at application level. They're called application control. For example, you check for sequential numbering of your invoices and things like that. Internal controls can be quite broad-based, covering an entire entity, which is what we are talking about in the ELCs. Like, for example, setting a tone at the top, your code of conduct sets the tone. Or it could be more specific at a process level, which is what you see as ICFR or IFC. These could be multiple processes. Then each of these standards, for example, SIA 315 has its own definition of what internal control is. I will let you read the standard directly. Section 134.5 of the Companies Act also has a definition of internal financial controls. Just if we touch upon it a little bit, it's the policies and procedures adopted by the company for ensuring, again, orderly and efficient conduct of its business. So you see these words or terms are coming over and over again. Adherence to the company's policies, safeguarding of assets, prevention and detection of frauds and errors, accuracy and completeness of accounting records, timely preparation and reliable financial information. So you see all of these standards, all of the definitions across the varied regulations and standards are quite similar. And there's, of course, also the term internal control system, which encompasses all of this. I'm not going to go into the definition because it's just as easy to read off these standards. So we'll get into a little bit more detail about entity level controls and process level controls. So first starting with the top level, which is the entity level controls, and the processes fall below entity. So what is entity level controls? These are activities that happen throughout the organization from the corporate headquarters. It starts at the top, at the highest level. And two different subsidiaries or different locations or different affiliates, whatever it is that you call your different branches or your different departments, it is a culture. You see the use of the word culture here, because it's controls and culture usually are not used together, but especially when you look at entity level controls, you're talking about setting a tone, setting expectations. That expectation can come through financial and also a lot of it through culture. When new employees join an organization, they are looking to see what kind of culture the organization has. Will they be a good fit? So that is nothing but culture. So entity level controls help to define what kind of culture the organization has, whether it encourages a questioning mindset, which is quite important, especially when it comes to investigating requests from executives that are unusual or unexpected. So do you question things that are not the norm of doing things? Or do you question the norm itself sometimes? Yes. Someone could tell you, okay, we are doing things not according to the policy because it's happening since years. So should you accept that? Is that an acceptable culture? So that's something that needs to be thought about when you're looking at entity level controls. This is what management thinks about when they're setting these controls. And therefore, auditors need to keep in mind because they are giving them clues as to how the entity operates. It helps you designing your audit work program when you know the entity's culture. So what are the kind of examples that you can have for, so again, getting into, before we move on to the examples. So entity level controls are activities that happen throughout your organization. They're pervasive. They apply to every corner of the organization. It's not just a single entity. It also, that's something to keep in mind. So examples are to implement or update an authority matrix. Many companies call it Delegation of Authorities. There are different names for this document. It could be a simple Excel. It could be a large document that sets out limits for different activities. For, say, a purchasing manager has a limit up to so and so lakhs or so and so crores to purchase particular items. A CEO has a much broader limit but may not have the opportunity to do, say, certain other activities. And HR manager would have the opportunity to hire or create new positions, but someone in logistics will not necessarily have the opportunity to set, say, someone's payroll. So authority matrix define what you can and cannot do in the organization, what kind of authority the highest level is comfortable in giving the managers in the organization. So it sets limits that require multiple levels of approvals, including, so the board of directors is normally the ones who sort of pass this authority down all the way to the manager. It outlines who has the authority to enter into transactions on behalf of the company. And these could be a multitude of transactions. The second example is to review and approval of non-standard contracts. Just broadly looking at this, because contracts are important. It's the terms and conditions based on which we interact with external parties outside of our organizations. It's the language that helps us to work together. So an important document, of course. So when you're looking at non-standard contracts, so there is, hopefully you have a standard established, which is the way you want to work with your suppliers, partners, customers, etc. So it's important that you implement a legal review in your organization. Or if your organization is too small to have a general counsel, at least you could have someone who's a legal reviewer, who can give you advice on what non-standard should be, what standard should be, who's validating the legal terminology to ensure that if you don't get into disputes, number one, or if you get into disputes, they can be resolved. So at least it should be someone that has legal knowledge to do this. The reason this is so important is because you could have so many fraudulent requests, etc., for non-standard clauses, and if you don't have someone reviewing it, you can land up in a potential dispute or be at the receiving end of a fraud. The third example is periodic and company-wide communication. So this is important because if you don't communicate, that's also one of the parts of the COSO cube. Communications of strategy, communication to your employees of policies, communication of what to do, what not to do. This helps building the culture. It helps ensuring people know the strategy, they know the objectives they want to reach. So there's a multifold advantage of ensuring there's communication. And then at the end of a period, you communicate results to know how we did as an organization, for employees to know how well they did, your partners to know whether they've helped you in accomplishing your objectives. So it's also a method of preventing fraud, if you look at it broadly, because the more communication, the more people know what to look out for and what not to do. There are several other examples that I'm sure you can think of entity level controls. If you all want, you can put it in the chat, or if you have questions, we can discuss them later. Next set is the process level controls. So these are nothing but the ones that concentrate on the actual activities along different processes in the business. So control the monitoring of these activities. The examples could be the approval of a particular transaction, authorization of a particular, say, sales agreement, verification of a bank reconciliation statement. So these are examples of your control activities and process level controls. They operate at multiple levels, obviously. While ELC is here, you could have process level controls at various levels below it. So at senior management levels, you're looking at high level procedures. They involve aggregation of a lot of data. They involve certain element of judgment. There is less consideration of detail. It's more of a higher level decision making. So not at ELC, but a level below that. So your strategy process, for example, is something that could fit for senior management. Then you have the mid-level, which is slightly lower than senior, but not the lowest. These could be activities that are focused on sets of data, which are much greater level of detail. So you could look at say, a purchase strategy, very specific in terms of strategy. You could be looking at setting budgets, etc., at a department level, for example. And the last level is looking at the lowest level of controls, which is the actual detail, very specific transactions. Purchase of, say, a particular equipment, that could be a specific transactions and controls in relation to that. So let's look at some more examples of process level controls. So it's given well here in terms of identifying different business cycles or processes. There's your revenue, inventory, expenditure, payroll, FA, treasury, your financial close processes, usual processes that most organizations will have. Now, in these cycles, in a revenue cycle, what kind of processes do you have? You have sales order processing, could be a sub-activity. You'll have multiple controls against that. The related balances that's looking at is the sales account, your receivables account. Invoicing is the other process related to revenue. Inventory, you will look at your material receipts, storage, inventory master maintenance. Of course, it's hitting your inventory valuation, cost of sales, etc. Expenditure could be of various types. You have procurement, processing accounts payable, vendor master maintenance, and the related accounts of payable, expenses, accruals. Payroll, your employee masters, salary processing, recruitment, separation, T&D processes. Of course, it's hitting salaries and wages accounts, accruals, provisions. Fixed assets, you will have asset acquisitions, capitalization, disposal, impairments, CWIP. You will have your property accounts, depreciation, gain loss on sale. Treasury, I'll let you read the rest. I think it's quite something that all of us work with every day. Now we'll get into more of the internal control framework, which is the COSO cube. Some of you may be quite familiar with it. It's the committee of sponsoring organizations that's developed a relationship between the objective and components of this cube to help understand how an internal control framework should be set up, how it should work. So it has various elements. There's control environment, there's a risk assessment, control activities, some of which we already spoke about, information and communication. Again, we talked on communication, and of course, monitoring. Everything ends with monitoring. Therefore, you can again make corrections to the control environment, etc., etc. So it's an entire circle. It's represented by a cube. So it's three-dimensional. As per COSO, there's a direct relationship between objectives, which represent what a company strives to achieve, and the internal control components, which represent what is needed to achieve them. The relationship, therefore, is depicted by a three-dimensional matrix in the shape of a cube. The three objectives: accountability, compliance, and operations, which we saw earlier, or regulations or compliance, you can say it either way. These are represented by the vertical columns. The 5 components are represented by the horizontal rows, and the company and its departments are depicted by the 3rd dimension of the matrix. So each component or row cuts across and applies to the 3 objectives. So that is why it's depicted as a cube. So for example, you will have financial and non-financial data that is generated from internal and external sources, which belong to the information and communication component, but are needed to manage operations, to report and to fulfill accountability and to comply with the applicable laws. So they are quite interrelated. Similarly, if you're looking at objectives, all the 5 components are relevant to each objective. Taking one objective, for example, if you look at efficiency and effectiveness of operations, it's clear that all the 5 components are applicable and important to its achievement. The internal control is not only relevant to the entire company, but also to individual departments of a company. So we will get into each component one by one, which will help to understand the entire framework in more detail. The framework consists of 17 principles. So we look at the component, its principles, and the factors that are included in each component. So control environment. Control environment is nothing but a set of standards, processes, or structures that provide the basis for carrying out internal control across the organization. Establishes the tone, focuses on people, ethical, moral values established by the organization, the culture piece that we spoke about, leadership, teams, competence. So what are the factors? Factors we'll get into again in more detail. The principles. So it's talking about commitment to ethics and integrity, a very important one. If you know of organizations that are known for its ethics and integrity, the chances are that you will work with such organizations more than others who are not known for it. Board independence and oversight, again, important one. Organizational structure. Is the structure very hierarchical? Is it hard to get through the bureaucracy, or is it easy? You have one touch point and you're able to work with them easily. Commitment to competence, very important. How competent are your people? And the accountability portion. So let's look at the factors now. So we've got the factors on one side, for example, governance. And so how do we know, how do we judge governance? It's establishment of the overall management style, the philosophy, the tone at the top, approve and monitor an organization's mission and strategic plan. That's also included in governance, and it ensures and provides accountability. The management style, what can you talk about it? It recognizes and responds to risks, internal and external. How responsive is it? Does it accept the regulatory control? Is it complying with regulations? Is it responsible to internal and external audits and evaluations? Does it improve from what is being provided to it as an organization? Looking at ethics and integrity, you have obviously the code of conduct. You have an organization's values, which could be over and above sometimes to a code of conduct. Do you have a mechanism to ensure that if there are violations, you have, say, for example, sanctions? Do you call for disciplinary actions? So all of these establish your control environment. Also, how do you look at competence? What is the level of knowledge and skill required for every position? How do you qualify your candidates? What kind of qualifications do you look for? Are you always looking for a skilled set of people? Also, then the management attitude and employee morale. So employ minimal and guarded use of control overrides. If you're making too many exceptions and you're not really following the process, then why do you have processes in the organization? Or maybe the processes need to be relooked at. Demonstrate competitiveness to, demonstrate responsiveness to issues raised as a result of evaluation and results. Do you welcome employee opinions and contributions? Support and participating in ongoing knowledge management, sharing, education to ensure that everybody understands the system of internal control and therefore will be able to implement it. So this was a little bit on control environment. If we move to the next component, Before we move to the next component, which is on risk, we will understand some more terms. So this is where we talk a little bit about, so it's internal controls and risk. Here we talk about risk, and then we'll go back to the COSO cube. So what is risk? Risk is the possibility of something bad happening. Risk involves uncertainty. You could go out one day and, for example, in the current season, it could be pouring, so you cannot perform a certain maintenance activity. So uncertainty, even though if it's a planned maintenance, but if you have an outdoor facility, you couldn't do it. So there's uncertainty about the effects and the implications of an activity with respect to something that's human value, often focusing on negative, undesirable consequences. So if usually people look at risk as a negative or a not so desired consequence, but if you talk to risk management professionals, they will also say that risk is the potential opportunity lost. So you could look at it also as an opportunity, which is a more positive connotation. Of course, it being missed is negative, but seeing the opportunity itself is another dimension to risk. So something that it's important to keep in mind as well. So here we look at the various elements to understand risk. A risk event. A risk event is a potential event or missed opportunity. Again here, missed opportunity that may negatively impact your ability to meet business objectives. A risk score is nothing but where you look at the impact of your likelihood, the extent, or help to measure your risk factors. They could be assigned weights that help you objectively calculate your risk. It helps to score your risks, put it in a ranking or in a heat map. We'll see what a heat map looks like. A risk and control matrix. Every internal auditor is and should be familiar with a risk and control matrix, because ideally you should start your assignment by building such a document. Your work program, your audit program should have a list of risks and the controls that the organization already has or should have. It shows how your internal controls address each of the risks. So here's where you match your controls and risks. Risk tolerance and appetite. These are important concepts to understand when you're looking at risk. Risk tolerance is nothing but the acceptable level of variation relative to the achievement of a specific objective. It often is best measured in the same units that are used to measure the related objective. Risk appetite is the amount of risk on a broad level that an organization is willing to accept in the pursuit of value. So there is the value proposition and the acceptable level of risk, and they are both inversely proportional. It reflects the enterprise's risk management philosophy. Therefore, it reflects philosophy. How much do you want to take on? And in turn influences the entity's culture and operating style. So all of these are quite interlinked, as you see. So you could, your risk exposure is the potential loss that is presented to an individual project or organization, etc., etc. Tolerance is the acceptable level of variation that management is willing to allow. A threshold is the level of risk above which risks are addressed and below which risks are accepted. Treatment is, of course, when you're eliminating or reducing the risk to a tolerable level. We'll look at risk treatments more in detail later. And appetite is the willingness to pursue. And capacity is obviously your entire capacity to, or the maximum amount of risk that an organization is able to endure. So there are a lot of concepts around risk. You don't necessarily need to know every single nuance of this concept. Most of us already know of them, but looking at all of this is a little bit of jargon. When you look at examples, it's a lot easier to understand. So we will look at some types of risks which will help understand some of the concepts that we went through. Financial risk. So here again, I would like some participation from the audience, please. There are some financial risks up here. For example, fluctuation in currency rates, interest rates, stock prices, What other financial risks have you all been exposed to, or you all are already mitigating, or they form a part of your risk register, for example? Can you all give me examples of risks that are not on this slide? Online banking, okay. What is the risk in online banking? And where would it fall? Okay, it's a financial risk. Yes, absolutely. Risk of exposure, yes. To fluctuation in currency, yes. Yes, prices of procurement could increase, leading to a financial risk. Data loss, passwords, protect those. Bad debts, yes. Your receivables not being recoverable, that's a risk. Awesome, great. Strategic risks. You have changing customer preferences, competition, spoiling brand name, also the reputation risks. Any others that you can think of? Whether your company's objectives are going to be met, for example. Economic risks, fluctuation in import-export duties, exchange rates, political instability is so relevant in the current scenario that we have. The Russia-Ukraine war has led to a lot of instability in financial markets, in multiple scenarios. Yes, absolutely. Loss of market due to banned products. Excuse me. Change of government policy related to specific industry. Yes, very relevant. Technological risks. New technology. Failure of technology. Not adopting technology quickly enough. Security threats. Yes, cyber crimes are on the rise. You're looking at also regulatory or compliance risk, changes in tax structures. We have changes in our taxation structures quite often. When GST was introduced, for example, huge disruption. Environmental laws, labor laws, people focusing on climate change now is leading to a lot of environmental regulations which may come into place going forward and are already in place for certain industries, especially the highly polluting ones. Operational risks, your non-compliance to contracts by suppliers, buyers, irregular supply chain, quality issues, right? So all of these are the different types of risks. I'm sure you all can think of many more. Yes, technological obsolescence, natural calamities, COVID-19, floods. Yes, absolutely, great. Thank you for being such an interactive audience. So this takes us to the next portion of the cube. I'm going to go a little bit faster because I think we'll run out of time otherwise. So, and also I think my previous faculty spoke a little bit about the risk assessment. So we'll go through this a little bit quickly. Each component has a bunch of principles that are linked to it. So risk assessment, it's nothing but the process of identifying risks, rating the likelihood impact of a risk event. It addresses how the organization assesses risk and identifies threats to the organization. So really important. This is where you identify your threats. Internal control assessment that can be performed, and internal control assessment can also be performed at the same time. Risk assessment, this takes the risk assessment and maps internal controls to the risk to determine if there are gaps. If you know you have a risk, but there is no control matching it, the control is at a lower or a higher level, then you probably need to recalibrate your mitigation measures or your controls. So risk assessment component ensures that mechanism exists throughout the organization to identify, to manage, to mitigate warranted or unwarranted risks. So the goal alignment is critical, and it integrates all your significant activities. So what are the principles here? Identify and assess changes, consider potentials for fraud, specify objectives, identify, analyze risk. So the assessment, the identify and assess change. So it's assessing the change in the external environment as well. You could have, say, also in your internal environment, a change in leadership. It increases the risk as new motives, new culture could be brought to the organization. How do you consider the potential for fraud? It could be assessing pressures, market pressures, competitive pressures, opportunities because of gaps in processes, lapse in your design. Attitudes of people also could lead to, potential for fraud. So management needs to assess these overall risks that are employed, not only for employees, but also for executives. Specify objectives. So what do we look at? Here we are looking at specific objectives. It's important for management to identify objectives while sustaining the parameters of the industry regulations, as well as compliance requirements. And identify and analyze risks. We'll get into this a little bit. So we talked about heat map earlier. So I just want to show you all quickly what a heat map looks like. So it's actually your green, yellow, or amber and red. It's two-dimensional. You could have further dimensionals, a more complicated risk map as well. Why the heat? So red is your danger, right? Red signifies danger. That's your higher risk. So the chances of occurrence are very high. The severity could be also very high. That's all your red zone. And as you go lower in terms of probability and severity, it gets amber and then finally goes to green. So same as the 3 lights of a signal, works the same way. And you could plot your risks if you had quantified them based on the numbers on this risk matrix. And then you can see over time whether your risk is moving downwards as you apply control. So it's a good method for the management to get an overall view as to where your risks are, and then whether your control activities are actually moving it down. So it's good to pictorially depict your risks sometimes. So a risk and control matrix helps the internal auditor facilitate such assessments. So it identifies objectives and risks to achieve them, determining the significance of risks, taking into account the likelihood, impact, of course. We'll get into treatment. It ascertains the key control management uses to manage risks, evaluates the design adequacy of controls, helps to determine whether it's appropriate to test for the effectiveness. And of course, testing controls that have been deemed adequately designed to determine whether they are operating as intended. So some of the useful ways to do this is to interview management, review organizational plans, look at policies and procedures, perform walkthroughs. You could have internal control questionnaires, that you send out to people to get information. Use flowcharts to determine or obtain more information, to know the adequacy of design. That's a great way to look at it. You could utilize inspections, confirmations, continuous auditing, data analysis, so many methods to test controls, right? If we look at the entire risk management process here, so it's looking at the entire process from end to end, but very broadly. First step is to identify the risks. If you don't identify risks, you can't move forward. So in a risk assessment, the first thing you do is to know what your risks are. So you need to identify it. Identification can come from various ways. You could have a bottom-up approach. You're looking at every single employee, bringing in their perception of risk. You can look at a top-down approach. Ideally, you should do both to have a great or a homogeneous risk assessment program, and that also ensures that everybody is on board with each other. So the first step in risk management is identification. A strategic approach can be identifying risks against key company objectives. A good way to start. Risks relevant to the objectives are considered, evaluated, which result into a small number of risks. Having a risk register that is too large is quite hard to manage, so it's important to finally prioritize them. So identifying key risks is important in order to allocate responsibility for management of these risks. Ultimately, someone needs to track it and monitor it. A company's performance can be at risk due to, say, internal or external factors or both. Therefore, it's important that risk identification is comprehensive. So you start with comprehensiveness and then you move to prioritization. And this is an ongoing activity. Identification of risk doesn't happen just at one point in time. You could have changing scenarios leading to new risks being generated. So it needs to be done, if not continuous, at least at a periodic basis. So you could do this through interviews of key personnel, of stakeholders relevant to the entity. You could also look at all the documents that we looked at or we talked about earlier. So you could analyze the risk universe, you could benchmark with competitors, you could use existing risk maps at branch level, different levels of the company. There's a whole, so then once you analyze all this information, you're looking at the likelihood and the impact. So you look at, so like we saw in the earlier slide, you're looking at the likelihood and the impact. It's your X and Y axis, and that's how you prioritize your risk. You'll obviously spend more resources as on a risk that is posing a greater threat to the organization compared to something that is not such a high level risk. You may spend more time on something that is having a high level or high chance of occurrence and is significant than something that is very, very rare. For example, no one could have possibly envisaged a pandemic of this size and scale. So you may not have had something in your risk register for that. But of course, once it's devolved, you will have to act quickly. But if there are people who considered something like this in their BCP, they would have had options to treat, respond to that risk condition, right? There's a rare chance that someone may have had it. So that comes to the next step, which is treat. And then you, of course, monitor your results and adjust as necessary. So looking at the 4 types of risk mitigations, you could basically treat your risk. So this is the treat portion of the risk. You can accept it. Of course, you can say that the cost or the benefit of mitigating this risk is too high. I would rather accept it. Okay. Can you think of some examples where companies are willing to accept certain risks? Okay, while you think on that, I will continue. Avoid. You can, of course, avoid certain risks completely. It's a strategy. For example, you can have a product testing to avoid the risk of failure of a product before the final production is actually done when you're looking at a new product. An example of avoidance of risk. Risk transfer. This is an easy one. I'm sure you can give me examples of that. Biggest one, insurance. Reducing risk. This is what we do with our controls, right? For example, if you are, say, you're looking for when you have a new project or that you want to put in place, you will look for funding for the project beforehand to ensure. One of the things that you look at is funding to ensure that your project is going to be a success. So you reduce the risk. You put in policies and procedures to ensure safety. Again, you reduce the risks. So putting in policies or procedures could be one method of reducing risk. So these are the different things that you could look at. I'm sure there are examples, more examples that you can think of. Competition from low-grade products. Yeah, sure. Now I'm going to go into the role of an internal auditor in evaluating risks, since we are mostly internal auditors here in the audience. So an internal audit activity must evaluate the potential for occurrence of fraud. So there's a potential. It's not talking about that the objective is to look for errors or frauds. No. If there are any red flags, an internal auditor should have procedures that and the normal procedures that are used to evaluate your processes and systems. If they throw out red flags, it's important to flag this off. So, and the internal auditors must incorporate the knowledge of the risks gained from other assignments or other audits that they have done to evaluate the risk management processes. Internal audit activity must also evaluate risk exposures relating to the organization's governance, operations, information systems, regarding strategic objectives, reliable integrity and operational information, your efficiency, effectiveness of operations and programs. We've looked at some of these, so I won't go into it again. Also, you must address the risk consistent with the engagement's objectives. So if you're looking at a particular audit project, what are the risks to the project? And of course, most important, assisting the management in establishing or improving risk management processes. And needless to say, you cannot become management. You need to stay one step away and be independent. Going back now to the COSOQ, we have looked at some internal control activities earlier. So, and we looked at what activities are. So activities are nothing but procedures, policies, what management uses to mitigate the risks to ensure that it meets its objectives. These are actions towards completing the company's objectives. Yes, preventive, detective in nature. So we look at the types of controls. To be effective, control activities, what do they need to be? They need to be appropriate. They need to function consistently throughout the period. So it can't perform in January but not work in February. That's not consistent. It needs to be cost effective. You would rather accept a risk if the cost to implement the mitigation is too high. It needs to be comprehensive, reasonable, integrated into the organizational objectives. It cannot be something different from what you've decided to do. So you select and develop control activities. Every organization does that. And you need to look at the risk of controls not operating adequately. You select and develop technology controls. We looked at some of those, and policies and procedures, which is important, the implementation of these. So if we look at the types of controls, these are the three most important types. Preventive. This prevents or minimizes errors, irregularities for occurring. Separation of duties, dual check signing, 2 people sign, purchase policies, having 3 quotes, examples. Detective, how do you come to know that there are errors or irregularities? For example, in a bank reconciliation, that's done at the end of a month or end of the day, depending on the size of the organization. So you know only at the end of this period whether things are reconciling and whether they're correct. So therefore, detective, physical verification of assets at the end of a period. Then the third step is corrective. Error has already occurred and then you need to correct it. So preventive is before occurring, corrective is after occurring, you fix the problem. So identifies errors and other unintentional irregularities such as backup procedures, contingency planning, like a BCP that we spoke about. Some examples, when you could be looking at, these are for example specifically in a security control. It's looking at preventive, detective and corrective to help understand the different types. Physical controls, you will have gates, fences, locks. You could have detectives such as surveillance, CCTVs. Corrective, repair physical damage. So repair, something has already occurred and you're repairing it. You've lost an access card, you reissue it, making sure that the person actually requires the access. You could have technical controls, preventive. Most people have firewalls, antivirus. Corrective, your VAPTs. Sometimes just rebooting a system fixes errors. Administrative, hiring policies, separation of duties, data classification, etc. So I'm sure you're quite used to all of these controls. 5 key internal control activities. So segregation of duties, like we looked at, a really important one. It ensures that individuals do not get such a control that are in conflict with another duty that they need to perform, which would not require them to collude then because they can do all the activities themselves. Authorizations or approvals, we talked about this, having a delegation of authority, having an authority matrix, establishing limits. Documentation, this is important. You need to preserve evidence, you need to substantiate your activities, especially critical decisions where you're using significant amount of judgment. It's good to document them and the reasons, the assumptions that went into it. Transactions, of course, you need to establish an audit trail, not only for an auditor to come and audit, but for the management to go back when they need to. Policies and procedures will help define how these need to be done. So these need to be documented. Security of assets, You need to obviously secure your cash, your inventory, your equipment, confidential information. Data is the new oil. Perform periodic physical physical verifications for everything to establish existence, quantities, locations, conditions, etc. And reconciliations and reviews, which we spoke about. The next portion on the COSO cube is the information and communication. We spoke a little bit about this, so I'm going to skip this. Just the principles that apply to this: obtain and use of information, internally communicate, externally communicate. Monitoring, the last part of the cube. Monitoring activities are nothing but evaluating each of these 5 components. The effect of the principles within each component are present, functioning. Monitoring is management monitoring of the company's data systems and whether the controls are working, giving feedback on the efficiency and effectiveness. Also, what the auditor does. How risks are addressed, identify control deficiencies, which allow errors to go undetected, frauds to go undetected. Enables personnel throughout the organization to identify when a control has failed, presents an objective viewpoint. So the principles affecting this are ongoing and or separate evaluations, communication of deficiencies. Some of the elements for effective monitoring is a good supportive tone at the top, organizational structure that assigns responsibility in a way that people can carry out this objectively and with the authority required. So authority and responsibility need to go together. A starting point or a baseline of known effective internal control from which ongoing monitoring and evaluations can be established. So this is all about monitoring. That ends the COSO cube. That is the entire framework of controls. There are various tools for monitoring internal control. You could have communication collaborative tools. You need that for the COSO component. Security focused generic tools. We looked at some of those. Regulatory technical reference tools. Looking at the regulatory frameworks, document management, workflow tools. If you need to keep evidence, how do you keep it? How do you ensure it's retrievable? You need data mining, file retrieval. You could have pattern recognition, business intelligence tools. People adopt RPA, AI, business performance management, real-time compliance tools. So you could have a lot of these to monitor your internal controls. So methods of evaluating internal control systems. You can have narrative records, memorandum approach, which is an exhaustive list of the controls. You can have checklists, flowcharts, control questionnaires. I'm sure you'll use all of these. Weak internal controls increase risk. So what kind of things could lead to an increase in risk? Business disruptions, business interruptions, system breakdowns, external events like COVID, erroneous management decisions. If you have data that is incomplete or misleading, you will make the wrong decision. Fraud, embezzlement, and theft, of course, this is going to increase risk. Statutory sanctions, penalties from failure to comply with regulatory requirements. These could be huge. You could even be asked to shut down your business. So an important one to keep in mind. Excessive costs, deficient revenues. Your business sustenance will come into question. Loss, misuse, or destruction of assets. Unintentional loss, intentional loss could go into the previous one of cash, inventory, or equipment. Then principles of a good control system. You need to have obviously well-designed accounting system so that ultimately all transactions go into your financial reporting, financial accounting. So that will give you a well-designed system will ensure you have checks and balances and you get red flags. Competent personnel, we talked about that. Division of work, the segregation of duties, nothing but that. Supervision. So where you don't have too many controls, you should have adequate supervision. So you compensate for example, your manual with automated or vice versa. Sound practices. Culture determines the sound practices. Separation of operational from record keeping. Again, element of segregation of duties. Separation of custody of assets from accounting, same thing. And internal audit, the independent verification itself is an example of a good control system. Limitations, your structure could be such that it doesn't let you have a good internal control system in place. Size, too large a size with not enough control. Unusual, too many exceptions. Too costly, controls are there, they're too many or too costly. People are abusing their power, going above authority. Collusion of more than one person, which defeats the SOD. Obsolescence of your technology, leading you to bypass, necessitating bypass sometimes. Human error, of course, and frequent follow-up measures. You could have too much control or too little control. Both of these are possible. Auditor's duty to understand the system, determine adequacy, determine reliability, and review the evaluation. Responsibility of the internal auditor, as given in the standard, is also the slide that you see on the screen. It's of course the duty to check the design, proper implementation, operating effectiveness. A lot of this we've already covered, so I'm not going to go into the text of the standard, but rest assured we've covered it in what we've seen so far. Steps taken by internal audit to promote continuous improvements in monitoring effectiveness. So training on controls, it should be a continuous process. Ongoing self-monitoring is a great way to also know if your controls are working. A lot of people are looking into continuous auditing, which also sees whether, independently sees whether you have red flags. Facilitating control assessment sessions, having sessions with the management, explaining what are good controls, what are not so great ones, getting their inputs on what is working, what doesn't work. It helps to strengthen the system. Helping management establish logical structure for documenting, analyzing, assessing, design and operation. Assisting development of process or identifying, evaluating and remediating control deficiencies. So if you're seeing a problem, how do you address it? Something that internal audit can help with. Also keeping abreast with the new changes in laws, regulations, your environment can help you to keep, making changes to your control systems, and monitoring the changes in technology to basically addressing the limitations is what is on this slide. Again, responsibilities of board and management, these are coming from various sections. This is a part of the standard itself. So the director's responsibility statement has a responsibility to directors for which internal controls is required. The company's rules require it. Again, responsibility for the board of directors to ensure that the adequacy of IFC with reference to financial statements is in place. LODR also requires a compliance certificate from CEO, CFO. This requires you to have good controls in place. Again, Companies Act requires the statutory auditor to report on internal controls. So overall responsibility is there, for designing, assessing adequacy, implementing and maintaining operating effectiveness, rests with the board and the management. So that's the most important thing. The auditor is a third line. They assess controls. So various questions that you can ask. I think we are almost out of time, so I'm going to keep this as the last slide and then we can go to questions. Does your organizational or does your governance structure maximize risk coverage and resources? Now, these are questions that I'm going to pose to you. So, okay, I will slow down a little. Questions that I will pose to the audience. So please feel free to speak up or put something in the chat. What is your governance structure like? How do you maximize risk coverage? What kind of resources do you use? Do you update your ICFR program? How do you deal with regulatory changes? How do you build that into your control system? So this is pretty much the end of my session. I'm just going to leave these questions up for people to look at, respond, ask questions if they want to. The rest, actually, I have case studies, but we can either go into it or address questions, whichever way the audience wants. Okay, I think there were some questions in the past. Let me see. Okay, I don't see any questions. So case studies. Okay. So internal controls for key processes in an organization. So these are questions for the audience. So unless you participate, we will not be able to go forward. What should you consider when designing internal controls? For example, in authorization, you'll have appropriate people who should review or approve transactions before execution. So examples of controls are setting authority limits, clearing, having a clear definition of what should be authorized, having timely authorizations. So these, I'm giving an example of the principle and the example so that it helps you address the case study. Document sufficient information. So you'd have policies and procedures to ensure that your documents are made, set of standards, maintain records. Okay, so the first case study, key risks and controls in payroll calculation and processes. What could possibly go wrong? And what can we do? Questions for the audience? Ghost employees, yes, great. That could possibly be additional employees. That's a risk. How would you address it? Number of days present, deduction of advance, expenses, recovery, great. Examples of good controls, change in management in the payroll process to be reviewed. Yes, it's a great control to ensure that the guy in charge of payroll is getting rotated. So I have put up some of the things here. Establish standard payroll review procedures for each payroll to run to ensure accuracy. It could be arithmetic checks on an overall level, reconciliations between payroll movement and its supporting, like leave data, attendance records. You could have security cameras also that show you records, staff contract for new staff, your employment contracts, comparison of current month payroll against previous month to know if there are any unusual trends, documenting each check performed on payroll calculation and retaining these evidence. The segregation of duties could be people involved in payroll calculation should not be the people reviewing it or disbursing it. More payroll processing. So this is another statement that could go wrong. Unauthorized or inaccurate payroll payment is processed. So you would have staff responsible for payroll that should only prepare the bank auto pay instructions or checks, hopefully auto pay by now. And after the payroll amounts have been reviewed and approved by another or different authority. Yes, absolutely. Recruitment of unsuitable person is another risk. Safeguarding of assets, implement access controls, independent checking to ensure final payroll amount is the same as the approved amount. Segregation of duties we talked about. Obtaining a bank card or book from the staff during an onboarding process to ensure that you're sending it to their bank account. So you're verifying those details. So this was an example of an easy case study. Payroll is something that every organization has. So I had further case studies, but I think we can actually end here. So thank you so much. Thank you to the audience for being quite participative, and to ICAI for having me here.
Thank you, Smriti ma'am. Friends, it was indeed a wonderful webinar, and a very intellectual presentation also. Are there any questions? Because it was very interactive session, and members were responding very well. Anyway, I can't see the chat box, so I can't say are there any questions remaining. I think, ma'am, can you see? Can you see the chat box?
Yes, I can see it. I see the questions box, but I don't see any questions.
Okay, no issue, no issue. So, ma'am, thank you so much for sharing your wisdom and experience with our members, and the way you gone through the subject, and the by that I read initially, I saw your experience, too much of experience, and your we can observe that we experience that your experience was talking aloud. Ma'am, you took us through many issues, aspects of internal control and risk management. You enlightened us about the COSO framework also, key internal control activities, tools for monitoring internal controls. Even you presented us with a case study also. So I'm very much sure that this presentation and your deliberation with our members will definitely help them in undertaking or discharging their professional responsibilities. So on behalf of the WIRC, ICAI, and our delegates, I extend my sincere regards and thanks to you for sharing your views and time with us for benefit of our fraternity. I request all the members to join with me in appreciation with big round of applause to our today's learned faculty for her contribution to success of our today's webinar. Thank you so much, ma'am.
Thank you.
Vinayak Mishraji.